Hello, hello. Blessed Sunday. This is Agnes NKhata-Blackwood, your property Queen DFW. And I want to welcome everybody to my first episode of The Closing Table. Now, the closing table is also known as the place where deals get done. And particularly on this show, we will be discussing real estate. Real estate, one of the number one industries in the world, changing lives, making dreams come true. And it is my honor, my pleasure to let you know that that is the industry that I'm in. My name is Agnes NKhata-Blackwood, and I am a realtor, real estate professional based in Dallas, Texas. I am originally from Malawi, Africa. Shout out to all my Africans tuning in today. And I basically represent the diaspora. I am here to help people from all walks of life from all over the world. And I just want to welcome you to episode 1 of The Closing Table. So today we are talking about a very important topic. I'm not even going to waste your time. We're going to get right to it. We are talking about credit. Most people, when they hear the word credit, they cringe. They go hide in the closet, they put a pillow over their face. But I'm here to tell you that credit is nothing to be afraid of. Credit is something that gives you leverage out here in the world. And you know what? Most people are afraid of things they don't understand. And that's why I wanted to make this the first topic that we talk about when it comes to real estate and home ownership. If you are a first-time home buyer and you're watching this today, honestly, this show is for you. We are going to be talking to a credit specialist, okay? A financial solutions CEO, Miss Demetria Ross. She's going to be answering questions, frequently asked questions about credit as it pertains to the home buying process. And even just going through what is credit? Why is it important? All your frequently asked questions that you've been submitting to me all week, I got you. So without further ado, I do want to get you ready for our special guest today on the closing table. Demetria Ross, she is a wife, a mother of 3, and the owner of Ross Financial Solutions, a credit restoration company. She helps customers with business and even ownership to improve their overall health of their credit profile, qualify for home ownership, and lower interest rates through legal credit repair. She is also a future real estate investor, and her goal in the years to come is to help at least 20 families realize their dream of buying a home. Oh, that is her goal for this year. For this year, she wants to help at least 20 families realize their dream of owning a home. So, hey, I am ready. I hope you're ready too. I'm about to bring in our special guest. Please welcome Queen Demetria Ross.
Good morning.
Good morning.
Good morning, Agnes. Thank you so much for having me, and good morning to everyone tuning in. I really appreciate it. As Agnes said, a very great introduction. I definitely appreciate it. I'm Demetria Ross, and I own Ross Financial Solutions, a credit restoration company. And overall, I just want to help as many people as possible improve their overall credit profile. And this year, my goal is to help as many people as possible with realizing their dream of home ownership, because it's not too far out of your reach. We can definitely buy homes. We can have high credit limits. We can get the loans to grow and start our businesses. But it overall comes down to the health of your credit profile, not so much the score, but making sure the credit profile is healthy. So that is my goal, and improving the relationship that we have with finances and credit overall.
That is beautiful. Thank you so much, Demetria. I appreciate you being here. And for everybody watching, please acknowledge this Black girl magic happening on your screen. We have a real estate agent, we have a financial solution CEO, and we're here to bring you some great information. So let's get right into it. My first question, Demetria, is first of all, what is credit repair?
Okay, so credit repair is Well, let me just start off because I know a lot of people, when they see advertisement and ads on their Facebook news feed or anywhere, whether it's YouTube, Google, it's given the, you know, information thinking that credit repair is just the deletion of negative accounts, deletion of derogatory, unpaid negative accounts. So credit repair is definitely that, but like I said, like I try to educate my clients, is definitely improving the health of the credit profile because you can have a 750 credit score, you can have a 700 or 650, and you're still being denied and you don't qualify for the loans or the credit cards or credit limit increases because overall, more importantly than the score is what does your credit profile look like? So credit repair is improving the health of the credit profile. It is making sure that you have the number of needed accounts, credit building accounts, installment accounts, revolving accounts in order to maximize your credit scores. It's credit education. It's credit education and teaching you whether you're working on your credit yourself, you're with another company, or you're with Ross Financial Solutions. It's teaching you how to properly use credit, give you credit education, and once you actually graduate a program or you're finished with the credit restoration program, you're able to have that knowledge to maintain your score so that you don't fall back into those old habits, so that you don't need credit repair again in the future. So, yeah, it's all of those things. But the overall goal, of course, in the end, most clients want to buy a home. So
Mhm.
it's to increase the scores to qualify for homes, get those credit cards, get those credit limit increases, and um, qualify for loans to start or grow their businesses.
Excellent. Thank you so much. And you brought up a very good point. It's not just about getting things removed and repair, but it's also about education. And I think that people, they do become a little bit fearful of credit repair because they feel like, they're going to have, this is something they'll have to deal with the rest of their lives. But one of my mentors actually told me, once you get the education on how this system works and how your personal credit can be restored and the things that affect it, it becomes a lifestyle and you don't have to be afraid of it. Credit goes up and down and you have the power to control it.
Exactly. Exactly. That is very true. And, if you're working on your own credit or you're in a program, it's definitely not recommended to watch your scores because you don't have to do anything. Your scores are changing every day. So
Mm-hmm.
you can log in one day and see that you dropped 5 points, or another day you've gained 6 points. Their scores are going to fluctuate. So it's definitely not about the credit scores, even though we celebrate those credit increases. Those small credit increases are the larger ones. You
Mm-hmm.
definitely want to make sure that you have in the background all the needed accounts. You're building positive payment history. You're not applying for credit too much. There's so many things that go into the calculation of a credit score. So it's really coming back to the education and the knowledge of what makes up a credit score.
Okay, wonderful. Thank you so much. And I'm going to move on to the next question, frequently asked question on the topic of credit repair. So, how long does credit repair typically take?
So that does vary. If I have a client where they come to me on a consultation or even just putting out free information on my live videos, I let everyone know that most people, depending on where they are, they usually need a minimum of 12 months of credit repair. And that can vary. It depends on how soon you start getting credit building accounts. It depends on your habits, if you're paying your accounts on time, if you enroll into those credit building accounts, how you're using and managing your open revolving accounts, if you have the number of needed installment accounts, if you have the number of needed revolving accounts. So there's so much that goes into that. But like I said, the minimum, usually most clients need a minimum of 12 months credit repair. And they usually see those changes that they're looking for, usually between like 6 and 9 months. And that gives them the option to say, like, hey, I can qualify for the goal or, the home or whatever it is they started the program for. They can say at that time, I can qualify, I'm done with credit repair. I don't necessarily need it anymore, or they can continue even on after that time to continuously just overall maximize their credit scores. So it is definitely going to vary for everybody. You don't want to watch anyone else's journey because your credit profile is different from the next. And, even between the three credit bureaus, your scores, your reports are different because you don't have the same things reporting to Experian, TransUnion, and Equifax. So that's definitely something to consider. It still just goes back to knowing what your goal is, knowing that credit repair is not an overnight process. But if you get with a company, if you get with a credit specialist that is knowledgeable in this area, then if you also have the patience, you'll definitely be able to reach your goals.
Thank you so much for what you said, Queen. So you mentioned something, collections. Okay, that's something that we all have experienced, and if you haven't, bless you, keep it that way. Things going to collections. Should collections be paid?
That's a great question because on social media, there's a lot of things circulating, some correct information, some totally far off and inaccurate. But I let everyone know that before you pay a collection, first of all, the damage is already done. Once it hits your credit reports, the damage is already done. You can pay a collection depending on what your goals are to decrease your debt to income ratio, of course, but paying that collection usually won't have any effect on your scores. So if a lender or a bank pulls your credit scores, they can see, okay, you have a $0 collection, the balance is paid off. And depending on the status, it may be actually something that can help you. But paying a collection is not something that you want to immediately jump into. If you pull your credit scores or your credit reports from Credit Karma, My FICO, wherever you're looking at your credit, you want to first, acknowledge is the account yours. If you see items on your credit that are not yours, then that may be a case of identity theft or fraudulent activity. But if, like most collections on our credit reports, we know that the debt is ours. Credit repair is not going in saying that the debt is not yours, but it's putting the burden of proof on the bureaus to be able to prove that this is legally reporting on your credit reports. So before you pay any collection, my advice is to do your research to see how it can possibly be removed, because there are so many reasons to get an item removed from your credit report. And one of the main things is to make sure that it is following the Fair Debt Collection Practices Act. Make sure um, make sure that the FCRA and all the rules under it are being followed. So you can pay a collection and it's still not come off your credit report, because the collection agencies, the creditors, the original creditors, they are not obligated to remove anything from your credit. They report accuracy, and even if you contact them, in order to pay a collection, you want to do what's called a pay to delete. You want to have correspondence in writing that they're agreeing to remove that credit item or that collection item from your credit report before you pay it. Now, if they don't agree to remove it, then at that point you can go into your own credit repair, or you can get with the credit restoration specialist, because the goal is to still ultimately get that derogatory item off your credit reports. So I don't suggest paying any collections unless you've done your research and, making sure that all of the laws for reporting are being followed, or
Mhm.
you've gotten with a credit restoration company to see if it's possibly something that you can be removed, that can be removed if you're in the program.
Wow. Sister, you are really dropping some jewels right now. And honestly, I had to get with a credit repair specialist to really find out that what you're saying is 100% true. I have a testimony. I had a medical bill on my collections. And that's something that most people think I definitely have to pay this. Like,
Yeah.
this has to get paid. It's my medical bill. I can't get out of it. And I did my research independently. And I thought, and I called them. And of course, they were so happy to start me on a payment plan. And I thought I was doing something good. I'm like, okay, cool. I'm paying this down. It's really low. Maybe in 3 years, this thing will be will be paid. When I finally invested in myself and invested in a credit repair specialist, she informed me that actually that one you do not have to pay. She said, stop paying that immediately. And I was
Oh.
like, what? She said, yeah, stop paying that immediately. And she did, her credit repair magic. I know it's not magic. She did her profession and it was removed.
Mhm.
And I never thought that could happen. So everybody out there, definitely listen to what Demetria is saying. Do your research and definitely get with a professional to guide you, because it makes all the difference. So,
And
what is a misconception about credit that you come across in your profession?
so with me, I see a lot of information online that may be incorrect, and it's really just because it's circulating so much. If a post is going viral, it's going to be assumed that it's probably the correct thing. And a lot of the times, unless you don't have the knowledge, unless you haven't invested in education and consumer laws and credit reporting, then a lot of the times you may not really know what you're talking about. So yeah, one of the greatest misconceptions that I see is that credit repair is fast. I think that anybody can refer to a lot of the popular ads or a lot of the popular personal stories, and people saying it took me 2 years to go from a 450 to a 800. It took me 3 years to go from a 300 to a 700. Credit repair definitely takes time. You see, in this industry, we're known for having a bad reputation because scammers and identity theft, fraudulent activity, filing false police reports and things like that. So you may see these great, huge credit score increases when someone gets enrolled into a credit restoration program, which is not always fraudulent. It can definitely happen. I've had clients with 94-point increases within the first 60 days. I've had clients with 100-point increases within 6 months. So it definitely varies. But a lot of the times, those huge credit score increases may not be legal credit repair. So you want to do your due diligence in making sure that the company that you're working with or the person that you're working with is legally performing credit repair, because you don't want to get in any trouble. Not only are we challenging items on your credit report on your behalf, so it is going to fall back on you if you're um, falsely claiming credit claiming um, what am I going to say? If you're falsely claiming identity theft. So that's definitely something that you want to stay away from. Anything that promises fast results, anything that promises like a credit sweep or anything like that. So that's definitely something that I let people know. Credit repair is not fast. It does take a while to build up your credit profile. If you start credit repair, or if you are just now enrolling and you don't have the credit building accounts that's needed, you're going to go in and add those accounts to your credit profile, and usually you're going to see immediate increases. But since you still have a young credit profile, since you don't have that age, it's still going to take time to build payment history. It's going to take time for those accounts to age. So you definitely want to understand that you're on your own journey in anything, in any area of life, but definitely specifically credit repair, that you cannot compare your results or your deletions or score increases, decreases, or anything like that to someone else's. And I touched on a little bit, but the credit sweeps. Um, Credit sweeps, you want to stay away from them. And also, people are, especially now, over the last 2, 3 years, I've seen it go up a lot more. People are jumping to buy trade lines.
Mm.
Trade lines are definitely something that you're able to improve your scores on, but I don't suggest anybody spend a few $100s on trying to get a credit score increase unless you've had the negative or derogatory items reduced on your credit reports. As you can go purchase a $500 trade line, and this trade line has 25 years history, a $25,000 credit limit, and you don't see any change, or, a very small change. That's because you still have your own credit profile that you need to take care of: the collections, the late payments, the derogatory accounts, the charged off accounts, all the different risk factors that you may have on your credit report. So just do your research. Understand that just because you get a trade line, it does not mean that your scores are going to skyrocket. So that's definitely something. I see a lot of information circulating about that, and everything on your credit report is actually a trade line. What you want to do, even if you are qualifying and you're getting enrolled into those trade lines, you want to make sure that you have your own primary accounts. So when you go to the closing table, or you're going to apply for a mortgage or a loan, those trade lines or authorized accounts, they're going to be taken out of the calculation for your credit scores. So if you have 3 and 4 trade lines or authorized user accounts on your credit profile, it's basically like Agnes has all these credit lines. Where are your credit lines? So how do I know that you're paying on time? What is your payment history like? So I know that Agnes has great payment history. She has high credit limit. She has, an immaculate profile. But what does your credit profile look like? I don't know that you can handle credit cards. I don't know that you can handle revolving accounts because I don't see any in your name. So it's definitely important to go back on your own. Even if you start with a $200 secure card, maybe that's where you have to start it. Build up your own credit profiles, have your own primary revolving accounts in order to increase your scores.
Okay, Demetria, thank you. So, what the thing you just discussed, are you referring to, you said being an authorized user? So, adding trade lines that aren't necessarily yours,
Mhm.
and are you saying that those aren't as effective?
Yes, they can actually be very effective. Um, what's actually going to impact you the most is if you are starting off and you don't have a lot of credit. It's more for people without the credit, not necessarily that they have bad credit, they just don't have any credit at all. So it's really going to benefit you if you add your mom's credit cards or company sell trade lines. So that's more what I was getting at. People are actually going out buying two, 300, $1,000 trade lines. You're getting an authorized user account applied to all three credit bureaus in order to increase your credit scores because you don't have that age. So those are the profiles that are usually going to see the biggest increases compared to someone that has 10 collection accounts,
Mm,
60 hard inquiries,
mm,
30 charged off accounts. If you
mhm.
have so much unpaid negative accounts on your credit report, those authorized user accounts, whether you pay for them or you got a family member to put you on their credit card, it's not going to give you the impact that you're looking for. You either going to feel like, the information that you got was wrong, or you're going to feel like you wasted your money if you actually did pay for it because you didn't do your due diligence in actually trying to reduce the negative accounts that you have on your own credit profile.
Okay, understood. So, you're saying that it's important to focus on your profile first before trying to purchase new trade lines.
Exactly. That's totally correct. And even if you do, like I said, even if you do actually have an improved credit profile, if you're going through a credit restoration program, just say you started with 20 derogatory accounts and that's got down to about five. At that point, it may be a good thing to go ahead and add an authorized trade line to authorized user trade line to your credit profile. But even if you do that, if that person that you're adding has bad payment history, all of those things on that credit report on that credit card, they're going to impact your scores. So if they have a $20,000 credit limit and they are using $15,000 of that or 10,000 or 17,000, that's a very high credit usage. That's going to impact your scores. If they have recent late payments, if they have 30, 60, 90-day late payments, 120 late payments, all of that is on your credit profile. And you didn't do your research and making sure that they had great payment history, that they had high credit limits, and that they're in a financial position to keep up their payments, because all of that is going to impact all three of your scores.
Okay, thank you so much. We actually have some comments here. Edmund Blackwood said, great information. Miss Allen said, great info. And we actually have some live questions. Are you down, Miss Ross?
I am down. Bring them on.
Great. So we
Thank
have a
you.
question from Facebook Live from Viola Courtney, Miss Courtney. She says, if you got someone to do a credit repair and they did a credit sweep and they reported false identity theft, does that fall on you or the person who reported it?
And Viola, I really hope that you didn't go through this yourself, but if you're just asking for, whatever reason, it's definitely going to fall on you because, like I said, unless you're actually working on your own credit and you filed a police report, the identity theft is accurate. If I'm going into disputing your accounts, if I'm working on your credit for you, I'm working on your credit on your behalf. So the letters that I'm submitting are essentially looking like they're coming from you. Even when you get into the process of filing identity theft, usually you're going to have to go file a police report, or you're going to have to submit some type of correspondence that you are saying that these accounts were falsely opened in your name. So ultimately, it's definitely going to fall back on you. So that's why I recommend everybody stay away from credit sweeps. And credit sweeps can be, it depends on who's putting that word out there. It can be credit sweeps. They're just saying that they're very good at credit repair. They're very good at getting negative items removed from your credit report. But about 80% of the credit sweeps out here, they are filing false and inaccurate identity theft. So that's definitely something, if you see, you want to run the other way. But again, to answer your question, it's definitely going to fall back on you. Oh, your volume went away. Okay, I can hear you now.
Yes, thank you so much for tackling that question. Viola, if you want to go deeper on that, I'm definitely going to be putting Demetria Ross's contact information up. Please feel free to contact her, okay, so that you guys can get started. And she actually had one more question for you, Demetria. She said, also, are student loans really removable?
Yes, student loans are definitely removable and can be removed from the credit report. As with anything, removing any negative accounts from the credit report, it doesn't take away your obligation to pay the debt. So we can get it removed from your credit report, but you still owe them, especially federal student loans. So they can be removed. In my program, I actually don't work on any positive student loans. You may get discouraged because you see that those balances are high or anything like that, but if I go in and try to remove positive student loans, they don't have any negative information. It's not charged off. It's not in collection status. You don't have any late payments or anything like that. If I was to try to get that removed from your credit report, it would definitely drop your scores, because for most people, you probably went to school 10, 20, 30, 40 years ago, and those are your longest line of that's your longest account on your credit report. So that's definitely helping with age. So you don't want to, whether you're working on your own or you're with another credit repair company, you don't want to do anything with positive student loans. But negative student loans can be removed.
Thank you. Said something that a lot of people probably have never heard before. And she said positive student loans. Now, let me tell you, I've never heard that before. Can you just explain that to us really quick?
Yeah, positive student loans. That means that you probably went into forbearance or deferred them, and you don't have any student loans in default. If you do, then maybe they hadn't been reported. But if they're on your credit report and they are not reporting as a late payment, a charge off, or collection, they are positive. You may owe $30,000 or $150,000 in student loans, but again, you don't want to remove those because they could have like 20 years of history. So if you get those removed, then at that time you're decreasing your average age of account. So you can go from like 10 years average age of credit down to like 1 year, and that's definitely going to cause a decrease. So any student loans that don't have any derogatory status, you don't want to touch them.
Okay, excellent. Thank you so much. And we're going to take another question from Facebook Live before we move on with our home ownership credit repair. I'm really excited to get into that. We have a question from Facebook Live from Edmund Blackwood. And he said, what do you do if you are rebuilding your credit and you can't get a collection to come off? Do you then do a payment plan with them?
Okay, really good question. So if you are rebuilding your credit, you're working on it your own, and or you're with a company, if they've gone through their dispute process, if you know the laws yourself and you've got all the different correspondence back from the collection agencies, and they've proven that the debt is yours, they've proven that it's reporting accurately and there's no errors or violations on that account, then at that time, you definitely want to look into making a payment arrangement or settling the debt. So that's what I spoke on a little bit before, but before you pay anything, I would definitely reach out to the collection agency or the original creditor to make sure that they can send you something in writing that is going to allow you to make sure that before you pay that is going to be removed from your credit report.
Thank you so much. I appreciate you, Demetria. One thing that stood out to me when I first came across your social media accounts is a poster, and it said first time home buyer credit restoration. And I was like, oh, that's awesome, because obviously in my profession as a real estate agent, I come across a lot of really wonderful people, hardworking people, smart people who have that barrier of credit is the only thing keeping them from getting that approval. Whenever you are getting ready to purchase a home, the very first step that you take with your realtor is getting approved to see how much money do we have to go shopping with, basically.
Exactly.
Unless
Exactly.
you are paying cash, unless you are inheriting property, most of us are going to be using a loan, okay? And that is very much based on your credit score, your credit history, and obviously your income and other aspects. So, Demetria, please tell us, what is your first time homebuyer program?
My home ownership program is fairly new, but I created it mainly because I had so many inquiries with people wanting to enroll into credit repair, but they definitely didn't want the monthly payment. They didn't want to lock themselves into another monthly bill and an investment they probably can't keep up each month. So the homeownership program was mainly designed to reduce or waive the monthly payment. Doing that program, we're definitely going to work on your credit the same as any clients in my credit restoration program. But you're also paired with a mortgage advisor to make sure that you meet qualifications outside of credit, because you don't want at all to get your credit improved and then there's so many other different criteria that you don't meet in order to get you to the closing table. So whether you are enrolling with me directly or you're actually referred from, just say Agnes. If Agnes refers you, then you're actually going to work with Agnes along the way to make sure that you have everything in order as far as your debt to income ratio. I work all qualified negative items on the credit report while you're in my credit restoration program. But if she lets me know that, hey, this collection definitely needs to come off in order to reduce the debt to income ratio, then we're definitely going to be trying to get those collections off even more. But making sure that your student loans are not in default, making sure that if you have any old apartment debt or rental debt that may be paid. So there's different things in order to get you, of course, to your home. We're going to work on your credit, and we're going to make sure that along the way we're working on your credit, that you know what needs to be saved for a down payment, what needs to be saved for closing costs or payments on debt settling. So if I'm finished working on your credit profile and there's still negative items that may need to come off, then at that point you can use those savings. You don't have a monthly payment, so you can have those applied to the accounts that you may need to settle. So I created that so we can get more people to the closing table, of
Yes.
course, but make sure, of course, we're not just working on improving credit. We're working on the different things outside of credit that are going to get you approved for your home.
I really love that, Demetria. So you actually pair with a mortgage specialist whenever you're dealing with families that are trying to become homeowners. I really love that. That really makes your program unique. And like I said, that's what really attracted me to you as a realtor. I really look forward to helping those 20 families with you this year. It's going to be great. I can feel it. I can definitely feel it. And so we have another question from Facebook, and they said, can you please explain the debt to income ratio?
So I can explain it a little. I do try to stay in my lane, that is credit. But from what I know and working with our mortgage advisor, that is looking at the debt on your credit reports and comparing it to your income. I have a really great example in that everybody thinks that you have all these negative accounts on your credit report in order to get approved for your home, that they need to come off. That is totally not true. It is going to depend on what your income is. So I actually have someone that is very close to buying a home, and he has a $23,000 repo on their credit report. It does not have to come off in order for them to get approved. Right
Hmm.
now, they have a certain level of their percentage of debt to income is high. If I get one collection account that is a few $1,000s removed from their credit report, whether I get it removed because it qualifies for removal or they settle the account. That's going to get them to their home, even with a large recent repossession on their credit reports. So it's just overall looking at the debt on your credit reports. It doesn't include utilities or any household bills or anything like that. But it does look at the debt on your credit reports. It takes a percentage and of the charge-offs, I believe, and then the full balance of the collections, and it compares it to your income. So if you go for approval, then they may let you know like you need to reduce the debt on your credit reports or you need to increase your income. So that's definitely something that they'll look at in order to get you an approval.
Thank you so much. We are really, really going fast. I think people have tons of questions for you. I'm gonna allow everyone here. What is the minimum credit that is acceptable for buying a house for the first time? That is the money question of the year. Trust me.
Exactly. And I know Agnes gets this all the time. So from my experience, I've seen, people advertising they can get you in a home with as low as a 560, 580 credit score. That has changed a little bit, of course, due to the pandemic. Those programs are definitely changing, but even just what I know, I wouldn't recommend anybody get a home with a 580 credit score. That's just me. I've seen it done, and if that's where you're at, then perfect. But my my mortgage advisor actually during the pandemic, most of the time they were looking for a 620. I believe right now they're looking for a 640 FICO, and that's not far out of reach for anybody. That if you have the credit building accounts, if you have the number of revolving installment accounts, if we can get any derogatory item accounts reduced on your credit report, it's very easy to get to a 640.
Awesome. And yes, it's definitely a question I get often. And one thing you said earlier is really important, that you can't compare your profile to anybody else's. Um, Everybody has different goals. Everybody's not shopping for a $500,000 home. So what that person's profile may need to look like is not what yours has to look like. And you know what? Like you said, right now, 620, 640 is decent, but it's not just about the score, right? Please talk a little bit about that. It's not just about the number.
Oh yeah, definitely. As I stated earlier, you can have a 750. I can have two people with a 615 and one with a 750. A lot of people seen that with the Apple credit card that recently come out, and you can have a high credit score, but because of your risk factors on your credit report, because of derogatory items, that credit score does not matter at all. Of course, when you're going for a home, you get to different levels of credit. That means that your interest rate is going to go down. But if you have a 700 credit score, a 680, 750, and you're not getting approved for the things that you want and that you can probably afford, it's because you have what's considered an unhealthy credit profile. Maybe you apply for accounts too recently. Maybe you look like a great risk to the banks or the lenders that you're going to. Maybe you have too many collection accounts. Maybe your balances are too high compared to the loan amount. So, or maybe, you're just new with credit. You can go add credit building accounts to your credit profile, but as I spoke on a little bit before, you need to let those accounts age. So you may see credit score increases immediately, but you're going to be looking for the credit improvement over time. So there's so many different things that goes into calculating a credit score, and you want to make sure that you're looking at all the categories. The payment history, that's what your credit specialist is going to work on.
Mhm.
I'm sorry, that's reducing the collections, late payments, charge-offs, bankruptcies, repos, all of that off your credit report. There's going to be 30%, that's the amount owed. So that's your loan amounts, that's your utilization, that is the usage on your credit cards. You don't want to use anything over 30% of your credit limit. That's just like a basic rule of thumb. But I let my clients know you want to have your credit usage between 1 and 7% of the overall credit limit. Anything over, and I've tested it a lot of times on my own credit and just doing research. Anything usually over like 7%, you're going to start to notice different credit changes on your profile. You want to be mindful of how much credit you're applying for, because if you're applying for too much credit in a short period of time, you look like a risk. You look like you're financially unstable to a lender if you're going to, all these different banks or all these different lenders to try to apply for credit. And then, of course, as I let everybody know, you need the number of revolving accounts and installment accounts. People I find, are afraid of credit cards because maybe they've done their research, or maybe they've had a bad experience with credit cards in the past. Maybe they mismanaged them, or maybe they just don't trust themselves with credit cards. But you need that good debt in order to maximize your credit scores. It's just not possible to really get over like a 600 credit score if you don't have credit cards. So that's definitely something to consider. Know all the factors that makes up a credit score, and then work on each one at different times, or all at the same time, to make sure that you're maximizing your credit score increases.
Thank you. And you brought up another hot topic that came up as we were promoting the show this week, and you said good debt. Some people don't feel like debt is good at all.
Exactly.
Yes, we actually had a comment yesterday, and I told her I promised I would bring it up, and she said that she felt like debt is slavery. So this gets into obviously some financial literacy, some financial education, which we'll get deeper in future episodes. So can you talk very briefly from your perspective as a financial solutions CEO about good debt versus bad debt?
Yes, absolutely. So, of course, bad debt is going to be the accounts that went unpaid, the accounts that you had in the past that had to be charged off or sent to a collection agency. So, those things, of course, they're considered bad debt. You want to either pay them, but not before you see if they qualify for removal, because I think, as Agnes spoke earlier, you can be paying on a collection account that doesn't even qualify for you to be paying on it. They could not be licensed in your state. They could not be licensed to collect at all. You don't want to pay on a collection account and you get the original creditor contacting you saying you still owe. You incorrectly paid this company over here, but you still owe that account. So there's definitely a lot of different reasons to go through a credit repair program. But at the same time, getting back to the question, that's bad debt. Good debt is making sure that you have the needed accounts to build up a credit profile, to build up your scores. So you need at least a minimum of 2 revolving accounts and 2 installment accounts. Your installment accounts are going to be your mortgage loan. You probably don't have that, but your auto loan, your student loans, your any installment account that is going to have a set term. Maybe you have a $50 payment each month. You have a $500 payment each month on whatever that account is. It has a set term for a set number of months that you pay on the same account monthly, and then it closes. So you need at least 2 of those accounts to be considered a healthy credit profile. And then you need at least 2 revolving accounts. Those are usually your credit cards, or they can be charge accounts. But you definitely need at least 2 major credit cards, even if you go out and get like a self lender account. Well, that's actually, I'm sorry, that's installment. So even if you actually go and get a retail card, like you're at Macy's or you're at TJ Maxx or any other retail providers that offer a credit card, Target or anything like that. So you can have those, but you definitely want to make sure that you have a major MasterCard or Visa card reporting on your credit. So a minimum of 2 credit cards. So those things are considered good debt. You want to definitely be mindful of the credit limits compared to the credit usage. You don't want to use too much of your credit, because one of the ways that your scores are calculated is by how much available credit that you have. So you can have person A with a $200 credit card, and you have person B with a $20,000 credit card. The credit limits, they definitely matter, because the more available credit that you have, the better. But this person with a $200 credit card could actually have better scores because they're only using $7 or $14 of that $200 credit limit, versus this person over here, they're actually using 15,000 or 19,000 of the credit card. So definitely want to be mindful of the usage, but don't be afraid of credit cards, because like I said, you definitely need them in order to maximize your credit scores. You don't want to you don't want to be afraid of them. You don't want to run from them. If you go for a home loan and you don't have any revolving accounts, you're not going to get approved because it's hard to get your scores up to where they need to be if you don't have any revolving credit accounts.
Thank you so much. That was very well said, Demetria. And I really hope that everybody listening today took notes. Make sure you invite friends to watch whenever we repost this on YouTube and everywhere else. Demetria Ross, something that is very important to people when it comes to choosing their credit specialist. They are ready when they're ready to invest in themselves and say, okay, I'm going to hire somebody to help me with this credit situation because I want to become a homeowner this year or whatever the goal is that is affected by your credit. They want to know about results. On your page, I see you posting results. And that's why I brought you on. I love how you do the screenshots of the different results of your clients, accounts deleted, scores going from here to there in a certain amount of time. So the burning question would be for you, I'm sure people watching, is how long does it take to get results?
Exactly. Everybody wants to know that before they enroll, while they're enrolled. It's definitely something everybody wants to know. Like, what are they paying for? How long is it going to take for their investment to, definitely be where they put their money at? So it varies. You can enroll into a credit restoration program, and it's going to depend on your profile and your habits on how soon you see results. And when I'm posting results, I am referring to the deleted accounts and I'm referring to the credit score increases because that's what people care about. They care about the credit score increases and the account removals. But the results are going to vary because it's going to depend on, again, how soon you start building credit, how the credit bureaus are responding. I go through my full dispute process up to complaints to different credit bureaus, complaints and lawsuits against these consumer agencies. So you definitely want to give it time to work and don't be discouraged by someone else's results because they definitely vary. I could have somebody in a program for 7 months and they're up 100, 120 points. I can have somebody that's in 60 days with that same credit score increase. I can have somebody enroll and they don't see deleted accounts for about 4 to 5 months, but they're still getting those credit score increases because they have the credit education, they have the credit knowledge. They also have at the point that they came in, they started enrolling and applying for those credit building accounts. So definitely don't, whether you're working on your credit yourself or you're in another program, you do not want to focus and be discouraged if you're not getting deleted accounts because you can get approvals with derogatory items on your credit report. You can get a home with that too. Like I said, it's going to depend on your debt to income ratio. But usually when you're going through a credit repair program, the removals come from errors and violations. Those are what gets accounts deleted from a credit report. While the debt is still yours, the account is removed, your credit score 9 times out of 10 increased. So you don't want to focus on deleted accounts because 9 times out of 10, you are with, I hope so, that you're with a knowledgeable and educated credit repair specialist that is building up a case for accounts to be removed. So sometimes it does take a while to build up a case for an account to be removed, looking for errors, looking for violations and things like that. So results vary. Anybody that is coming in my inbox, I'm on a consultation, I'll let people know, usually you're seeing results within their first 60 days. And then around the 6 to 9 month mark, you're seeing really good results where either you're saying like, hey, I'm done, I'm going to get approved for what I want, or you're going to continue on to really just get the maximized credit scores that you can.
Thank you so much. Yes, that's very true. I mean, small errors can get it removed. That's why it's important to, take that leap and just check it out, and then get with a professional. People check their credit like this.
Yeah, every day, every day. Even I'm a credit specialist. I check my credit all the time. But one thing you made me want to mention is that when you are looking at your credit reports, you do not have to go in and dispute the items that's not yours. 9 times out of 10, like I said, these items are yours. They are going to be proven that the account is yours. So if you go in and challenge or dispute an item saying that it's not yours, it's at the click of a button that they're going to match your name and address to this credit profile, and it's going to come back as yours. You made it that much harder to get the account removed in the future. Not that it cannot be removed, but you basically put the burden of proof on yourself. You said the account is not yours. They proved that it is. So how are you going to dispute the account now? There are so many, over 25 different reasons to get an account removed from the credit report. So if you're not knowledgeable in the area, I definitely suggest reaching out to a credit specialist.
Thank you so much, Demetria. And our final question coming from the live, because this is a live interactive show, and we're going to be doing this twice a month with different real estate professionals, from mortgage to the inspectors, credit repair, everything from the beginning to the end of your real estate process. The goal is to get you to that closing table, all right? So our final question that we have, which came from Facebook Live, one account can be removed. Once account is removed, can it come back?
Yes, so that was actually one of the questions that I had here. So absolutely, it is, again, going back to the fact that removing it from your credit report does not delete the debt. It is not saying that this debt is no longer yours. It still is your debt. So there's a chance that it can come back. In my program, because I go through and look for the errors and look for the violations, I haven't seen that happen a lot, but it's very possible. I have seen it happen. What's going to be the main thing to look at is if a collection item is removed from your credit report, you want to at least make a payment arrangement on an account. You don't have to go immediately, because there are laws that must be followed before an item is reported to your credit report. But that collection account can be sold if it's within the reporting period. If it's sold and that new collection agency has the ability to report it, it can come back on your credit under a different collection agency, of course, with the same amount. But because there's so many different ways to get an account removed, if it didn't qualify to be on there in the first place and we found a reason for it to come off, there's a high chance that it won't come back on. But if the account is still within the reporting period, if the account is removed and maybe you didn't go out and even pay like $5, $10 a month, $15, $25 a month on that credit account to try to, at least set up a payment arrangement with the collection agency, they can still report it within that 7-year reporting period. So if you do get something removed, if you're working on your own credit or you're with someone, I would highly suggest to go out, make payment arrangements on that account, and that will allow it to keep from coming back on your credit report under a new collection agency.
Thank you. You are really giving us a lot. You are giving us a lot, and we appreciate you so very much. I want to close out with you by letting people know how they can get in touch with you, how they can actually get signed up with Ross Financial Solutions.
Thank you so much. So I see that you also put my Instagram hashtag on here. So I'm on Instagram as well. My handle is Ross_Financial Solutions. I did have 2 pages, so I need to delete the original one, but Ross_Financial Solutions. You can reach me on there. You can reach me on here. I do also take messages in my personal inbox. You can go to my Facebook business page. It's Ross Financial Solutions. Feel free to like while you're there. And I have a website. My website where you can enroll and get more information is www.rossfinancialsolutions.com. And if you sign up, the standard program is on the website. But if you are interested in the home ownership program, definitely reach out to me so I can see, how you were referred. If you came in on a live, if you're already working with somebody and you just need credit help, then we'll see and go ahead and get you the link to go ahead and get signed up there.
Excellent. Thank you so much. And yes, her website is right there at the bottom of the screen, rossfinancialsolutions.com.
Thank you.
And also on Instagram at Ross_Financial Solutions. Sister Ross, it has been a pleasure having you today. I know that you really engaged, you sparked, some minds today. And I just want to say thank you for joining me.
Thank you so much for inviting me. This was my first time on a live with someone else, so I definitely appreciate the invite. The more people that I can get on more eyes I can get on my business, the more people that I can help. So that's definitely what I'm trying to do. So I greatly appreciate the invite, and I look forward to working with you more in the future.
Thank you so much. I believe you. I believe you. I see your passion. I see every single day to you. It's not just about profit, but it's about educating and helping people. And that's why we have been linked up. I truly believe. So have a blessed day, and we'll see you next time.
Thank you so much, everybody tuning in. Y'all have a blessed day. Thank you, Agnes. Have
Thank
a
you.
great day.
All right. I am so excited. She really dropped some jewels for us today, guys. Once again, this is Agnes NKhata-Blackwood, your property queen DFW, and this is the Closing Table Talk Show. So I created this show because I really saw a need for us as a people to have a conversation about this home buying process. And to me, it's not just about selling homes or even just owning a home. Real estate itself is a huge opportunity to build generational wealth for your family. Real estate is something that different cultures have used to build wealth and also just to keep their legacy going. So let's take 2021 to really focus on things that aren't just going to impact your immediate, lifetime, but that's going to impact your children's. Okay, so please make sure you stay in contact with me. You can find me on Facebook, obviously, at Property Queen DFW, on Twitter also at Property Queen DFW. Please feel free to go and like my Facebook page, Agnes NKhata-Blackwood Realtor. And I just want to say thank you, Zikomo. Zikomo is how we say thank you in my home country, Malawi, Africa. This is your Property Queen DFW. Make sure you join me next time. We will actually be sitting down with a mortgage specialist. So we've talked about credit. Now let's talk about mortgage. What does it take to get approved? We're going to be talking to underwriters, home inspectors, everybody, even other top real estate agents here in DFW. So make sure you share the live, share the video with your friends and family, and remember that everything that is worth having in life does not come without work and a little bit of a struggle. So if you're watching today and a lot of these things were you, we're talking about these accounts, these debts, these student loans, and it's about you, just take this as a sign that today is the day that you should actually do something about it. All right. It's a new year. It's 2021. Everything is in our hands. It's in our hands. So let's go for it. This is the Closing Table with Property Queen DFW. Have a blessed Sunday. Thank you.